Hey everybody, Colin Plume, CEO, Noble Gold Investments. Thanks for jumping on. And we just wanted to get into what's happening in the markets. Obviously, precious metals have taken off, gone in an unbelievable direction. But when you see these things happen, you start to think like, well, who's been advocating for gold? Who's been out there promoting gold, and who thinks it's a good idea? So I went back the last few years, and I saw an interesting video from someone that a lot of people take financial advice from. Uh, well known, respected. And let's see what Dave Ramsey 2 years ago. Let's see what Dave Ramsey was saying about gold. Let's kind of cut to this clip because I think people will find this pretty fascinating. What his belief on gold is.
I'm over 70 years old, so in about a year and a half, 2 years, I'm gonna have to start taking cuts from my 401k, automatic payouts. The government makes you do that.
Your required minimum distribution. Yeah.
Right. I don't use that money. It just sits there. It was making money under the Trump administration. It's kind of losing money right now.
Yeah, notice
but
that.
Anyway, I don't really know what to do with that money because I don't need it, but my gut feeling is to invest it in gold.
No.
No?
We don't put anything in gold. No. If you don't need it and you want to let it sit somewhere, let it sit in a good mutual fund. That's fine.
That would do better than gold?
Oh, absolutely. I own some gold cufflinks, and that's the only gold I've got.
Okay. Yeah. I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down, much more than the stock market is. A lot riskier. And it does not yield the net return. The average annual rate of return on gold sucks.
Really?
Yeah, It's awful. Yeah,
I don't know that much about it. I've just heard that gold was a good investment. So
usually from people that don't have any money.
That 401k will just be part of my daughter's inheritance.
That's cool. That's cool. You're going to pull that money out of the 401k that we're talking about because you're required to, and I would just be moving it into good mutual funds in the.
Dave, big mistake. That was 2 years ago, right? Yeah, 2 years ago. So, it's interesting that Dave Ramsey doesn't recommend gold because one of his big beliefs is you shouldn't have debt, and yet the dollar is a debt instrument. Our whole economy is based on debt. Why wouldn't you want to have an asset like gold that doesn't have any debt behind it? Coupled with the fact that if you go back the last 20 years, gold has outpaced the S&P 500. If you go back the last 5 years, it's outpaced every exchange. And if you had bought gold when this video was taken, when he was like laughing about gold and it's so risky, you would have more than doubled your money in gold. So listen, everybody makes a mistake. I think that the problem is the advice when he started 40 years ago of just pay your house off and have, not have any debt. And it's easy for a guy that is worth $400 million. But in today's world, when, you're looking at a scenario where you need to make double-digit returns to keep up with inflation, you can't just socket it away in a mutual fund. You have to look at what's happening in the markets. You have to diversify some of your assets. So I think it's advice that unfortunately you have to look at your portfolios a little closer, and you have to look at what's going on in the world. And I disagree completely in his old thinking and methodology that you just drop it in a mutual. Another reason, just the fees. A lot of these funds, if you look at the top biggest mutual funds, some of these fees can range, all the trading fees and all the fees coming in and out of it. If you add it and then you add a 401k on top of it, you could be at 2 to 4% in terms of annual fees. So his advice should have been, you should get that money out of there as quick as possible, and you should get it into something else, and you should diversify. He didn't even ask him what other assets he has. What if he's got a bunch of money in the stock market already? Why wouldn't he diversify? It's, it's an agenda, and it's just, it's old. It's like the advice that, if you just work at a company for 40 years, you can retire there. Well, yeah, 40 years ago, 30 years ago, you could do that. But in today's world, you have to continuously add value, continuously get new job traits. You have to learn new skills. You can't just rest on your laurels. And I think that strategy by Ramsey is let's go to, we have charts that go through this. You don't have to take my word for it, but look at gold. When this video took place, you look at 2022, gold was sitting at, $1,700-$1,800 an ounce. And now we're at, 3,600. So obviously gold has outpaced since that video. And if you ask him today, he'll say the same thing. It doesn't matter, even though he definitely made a mistake. If he had looked at the charts, if he had looked at the trends, the central bank's buying so much gold. If he had looked at all these things, all the dollar printing, all the debt, and I will say, just in Dave Ramsey's defense, we've created more debt than we ever had. And a lot of people aren't understanding how to react to it. But I think in today's day and age, to not have precious metals in your portfolio is not the correct diversification. And we're seeing it. The new portfolio, big institutions are changing their tune. Let's look at BlackRock, what they're saying about the ideal portfolio. Let's see what their analysts are saying.
What do you think the ideal portfolio is supposed to look like today? We're surrounded by investors. We're surrounded quite literally by financial advisors who are thinking about that. Retail investors who are watching. What does it look like today?
Very different than the past. So maybe I'll start with the equity market. The first thing I would say, we're going through the most extraordinary technology dynamic I've ever seen before. I would stay long equities. By the way, you can buy vol. You can buy volatility very cheaply to manage your exposure. I'd stay long equities oriented to where growth in technology is. In fixed income, income is amazing. You're still clipping 6%. Would I stay 5 years in on the curve? I'd still clip that coupon. We're extending a little bit out. And then, quite frankly, there's some interesting things to do in privates, bespoke markets. And I think hard assets have to enter the equation today. Gold, Bitcoin, things that give you a little bit of ballast in the portfolio against potential for currency depreciation.
When you talk about Bitcoin should be part of the portfolio, what kind of percentage are you thinking about? Is it a 5%, which generally seems to be what people are talking about, more or less?
It seems high to me. So I run our global.
Yeah, so there's a little bit of Bitcoin, but overall gold. He was talking about hard assets. He's not the only one. So you have BlackRock, who's saying getting some diversification is important, having some gold. I didn't hear him say bonds. He said equities, fixed income, precious metals, alternative investments, and some Bitcoin. Morgan Stanley is also talking about this. Morgan Stanley is advocating. This is the new mix that Morgan Stanley is advocating. 60% equities, 20% fixed income, 20% hard assets, gold. 20%. When I started in this business 17 years ago, financial advisors were recommending 1% to 3%. Now we're at 20%. And it's just a reaction to all the debt and all the money printing that we've done. That's why the portfolio recommendations have shifted. And they're not even recommending bonds the way that they used to, which I find interesting. Oh, let's go. We got a video on this. Let's jump into it here.
The next leg higher for gold may have already arrived. Morgan Stanley, one of the largest investment banks in the United States, has come out and said the 60-40 ratio, equities, bonds, is dead, at least according to them. Their new ratio, 60% equities, 20% bonds, 20% gold. This is huge news. They are citing structural inflation. Gold is a better hedge and will outperform versus bonds. Look at the last year. Look at the returns you get, whether it's short-term, long-term bonds, 3, 4, 5%. Gold is up more than 40%. The gold miners are up over 100% year to date. Now, Morgan Stanley is not a small bank. They have over 1.7 trillion assets under management. How long until other banks, JP Morgan, Goldman Sachs, start recommending their clients do the same? This could create a surge in buying and a catalyst for the next leg higher. Morgan Stanley's Chief Investment Officer, Mike Wilson, said this: gold is now the anti-fragile asset to own rather than treasuries. High quality equities and gold are the best hedges, Wilson told Reuters.
Yeah, so you're seeing it across the board. Few other people, billionaires, Ray Dalio has been talking about this extensively. He believes you should have 10 or 15% in gold. Jeffrey Gundlach, who is the bond king, is recommending 25% of your portfolio not being too aggressive in gold. Bridgewater, they're all saying gold is a strategic asset class to have in your portfolio. So, I think you have to look at what's happening in the trends today. You can't look at old information anymore, unfortunately. And you have to be willing to be able to adjust in this environment, because inflation is so high. You really have to make sure you're hitting the mark on your own portfolio annually to make sure you protect yourself. More charts. We have another chart here that we want to get into. What do we got here, Fernando? Consumer inflation. Yeah. So consumer inflation, if you look at this is globally. Look at the United States inflation. We're ranking one of the highest. We're at 23%. For a strong country, Western, we're looking at 23% inflation here. But look at this consumer inflation across the globe. I mean, consumers have never been hit with anything like this. And that's why when our government comes out and says we're at 2.9%, and then you see numbers like this, what is the real number? It's not 2.9%, it's much higher. So yes, you are really in an inflationary environment. The cost of goods are going up. It's important that you protect yourself. Look at Argentina, 2,000% inflation. But all of these numbers are difficult for anybody to deal with. So this is important. This is an important stat to look at. Next, let's talk about, let's get into, we got a little, let's take a break here for 1 second. Let's jump into something.
When I first decided to invest in gold, I was a bit nervous and unsure how to start. Luckily, I found Noble Gold Investments. From the very first call, they made investing easy. No pushy sales tactics, no gimmicks, and no confusing free silver offers with hidden fees. Just honest advice tailored to my needs, giving me confidence every step of the way. If you're new to gold investing or want a partner you can trust, visit noblegoldinvestments.com.
And we talk a lot about gold, but let's pivot for a second and talk about silver. Russia, massive buy of silver. We can pull up that video there. But yes, not only does Russia produce a significant amount of silver, they produce almost 40 million ounces a year, but they're a buyer on top of that. So let's cut to that article there.
In its 2025 to 2027 federal budget, Russia allocated $535 million to buy precious metals, with silver explicitly included alongside gold, platinum, and palladium. Actually, there was another country recently as well. Saudi Arabia bought 932,000 silver contracts off the COMEX as well. So this is the first time during the current precious metals bull market that any central bank has announced silver purchases for state reserves. If Russia is buying silver, it could be helping drive the precious metal to a 14-year high, with precious metals prices surpassing $42 an ounce in September, up nearly 28% year to date. The move is not just financial. It highlights silver's strategic importance in a world where supply deficits and industrial demand are increasing. Now let's look at other countries buying gold. Silver's run is happening alongside a multi-year record spree in gold buying. Central banks globally are expected to buy 1,000 metric tons of gold in 2025, marking the fourth consecutive year at these levels. Poland, Turkey, and China are key gold buyers, with Russia doubling its own gold shipments to China. Across Europe and Asia, gold is being purchased not only for financial stability, but as a strategic hedge against currency debasement and geopolitical risk. Both gold and silver are setting records. Gold hit an all-time high of $3,667 on September 9th, 2025, driven by economic instability and surging central bank demand. Silver, meanwhile, is posting new highs in multiple currencies and regions and maintains velocity with the back-to-back weekly records. The gold to silver ratio, once over 100, it was actually 125 to 1 in March of 2020, now reflects silver's increasing strength as gold's precious metal sister comes out of the shadows. Now, do you think it's ironic that all of the most powerful countries in the world, the biggest countries, the biggest central banks, the biggest, most successful investors and billionaires in the world are all buying silver? Do you think that's irony, or is that pattern recognition? It's like they know something that the average everyday person doesn't.
Silver Slayer. Couldn't have said it better myself. I mean, I think that's the key is, since I've been doing this for 17 years, I've been watching the markets. I've never seen a scenario where you have Russia and Saudi coming out and buying this much silver. And so, yeah, everyone's like, wow, the price, but they're buying it now. They're buying it today. They need it. I talked a lot about earlier this year, the U.S. government buying silver, 400 million ounces of silver, $400 million worth of silver, last year. So you have Russia buying now, U.S. bought last year, U.S. will buy again this year. Most of the silver that's above ground is being used in the big uses, solar panels, electric vehicles, but governments need silver too. So I do think that there's an opportunity here. People are buying it. We have a silver guide. I have a silver book. Love to send you. If you're looking to get more information, let us know. But we're going on. I mean, this run reminds me very eerily similar to what happened in 2011. But I think in 2011, we didn't have this much debt. We didn't have this much, this move into hard assets that we're seeing today. We saw a massive run in 2011. They pulled back quantitative easing and the metals market pulled back. We haven't even put on quantitative easing. We haven't even lowered rates to the amount that I think we're going to lower rates. We're going to continue to lower rates. So we have more gas on the engine here. So to wrap, listen, the old way of making money is gone. You have to look what's happening on the ground today. This idea, oh, you're going to retire and you're laughing at gold like Dave Ramsey and his colleague. Like, you missed the boat, buddy. We're doubled since you said that 2 years ago. And you cost that guy a lot of money. I mean, that guy could be doubled sitting at home in retirement feeling really good, or now he's maybe up, maybe 20 or 25% in that mutual fund, which is okay, but he could have had a double of his money. So anyways, let's continue this. Let's continue to research, continue to learn. Send us your notes, send us your comments. Thank you for everyone for joining in today. If you have any questions, check out Noble Gold Investments. Our phones are live. We'd be happy to get you into physical gold and silver. You could have metals in your hands in less than a week. If you have an IRA, we can do an IRA. Paperwork takes 5 minutes, and we can have your IRA rolled over into gold and silver in about 2 weeks. So give us a call.